Óyeme, we're back for another 2-minute Q&A Tuesday where I'm going to answer as many questions as I can about the stock market correction within 2 minutes. Ya tu sabe, hit that timer. Let's go. All right, so the first question is, are we in a recession? No, we're currently not in a recession. We're actually in a correction. This is pretty much when the stock market in general is overhyped. And the baseline for the stock market is pretty much the S&P 500 and the Dow Jones. So what happens is in a correction is that these stocks hit a 52-week high and then they reduced to between 10 to 20%. And this is pretty much we're in correction territory. They're going back to reality of how much they should be priced at. But when they start going above that, 25, 35%, that is when we're hitting a bear market. And that's when we have to be a little bit more careful because if it exceeds 6 months, that's when we actually hit a recession. So I hope I answered that question all right. All right, the next question is, what should I do with my retirement accounts now that the market is taking a hit? This is a really good question. And this is one of the main reasons that I tell millennials specifically that retirement is actually an extreme long-term goal. If you're not following FIRE and trying to retire in the next 10 years, think about it. You actually have a lot of time on your hands. Retirement is realistically going to be about 25 to 35 years out. So stop looking at the stock market as something scary. Oh my gosh, I need to sell, and you're concerned about it. Start looking at the opportunities of being able to buy low and sell high when you get into retirement. That is the goal. One thing I would recommend is to not invest more into the market at this time. What you want to do is consistently invest what you've been investing into your retirement account and into the same investments. What you don't want to do is reallocate your investments and then the stock market jumps up and your investments are doing very poorly because you reallocated something more conservative. So stay consistent and ignore the news just for a little bit, you guys. All right, that's my little tip right there. All right, next question is, how can I protect my finances from this financial scare? I missed it, but that's okay. Let's keep going. This is a really good question. All right, so one of the things I tell millennials specifically is to really focus on their financial home. Okay, and what I mean by your home, we're talking about your finances in general, your whole financial plan. And if you want to have a strong financial plan, it all starts with that foundation. And your foundation is realistically going to be your emergency fund. So if your emergency fund is only at $1,000, this is the best time realistically to start bumping that up to 1 month of your bills. If you're at 1 month, 2 months, and so on and so forth. This is going to make you feel very comfortable and confident in having a very big cushion in your emergency fund, which also makes your foundation much more stronger. And then eventually, when you're ready to start building your home and buying the materials of your financial plan, you'll start considering, are the materials cost effective? Is this something I can maintain? And one of the best ways to make sure you can maintain your lifestyle is to actually live below your means. And one of the best ways that I've been able to do that is by cutting debt, because if you owe less people, you can take more money home. And also really looking at your lifestyle. Now that's really hard for a lot of millennials, but if you're focused so much on the decor of your home, you're never going to actually complete building your home. So just take a look at your lifestyle and make sure you're not overinflating it and living above your means. All right. Sorry I took so much time, you guys. Don't forget to follow me on social media and on YouTube. And don't forget to subscribe and share this content with all your friends and family. Bye, you guys.